So today we're going to talk about property management. And for all of you that are going to click right off of this, don't. One of the big reasons real estate is failing right now is property management, so you're not going to want to miss this video. One of my core strengths in this business has been property management. I started in the business and I still do the business, and we manage over 10,000 tenants currently. In this video, we're going to talk about 3 key tips for property management because many people right now are suffering from operational issues in addition to rising interest rates, rising cap rates, and rising expenses. Many of these are solvable with good, sound management. In the world of property management, we look at 2 things: managing the tenants and managing the property, and they are very different. So first, let's look at the property management process, which we're not going to get through the entire thing today in this video. There's plenty of steps in the process. All of these take time and effort, including lead management, tenant application, leasing, tenant care, rent collection, lease ending, and of course, turnover. Some of the support functions that we have currently in my company are marketing, facilities management, customer service, vendor management, staff development, and of course, financial management, which is what everybody's talking about right now. One of the primary reasons for property management is to maximize the efficiency of the cash flow and pay your investors as much as you can. Property management tip number 1 is the customer. Now, a lot of people focus on revenue at this point or income, but really the number 1 tip and the number 1 focus for all of you should be your customer. If the customer is happy, the money flows up and gets distributed. So I broke this into 3 different categories: existing residents, new residents, and prospects. And there's very different strategies for each. The mistake with a lot of people is they focus on prospects instead of the existing residents. And this happens with lots of businesses. They focus on new customers as opposed to spending most of their time on the ones they have already. That's why I have $3 signs under the existing customers or residents. If you focus on the 4 things, which are maintenance or calls that you get from them, the response, how long it takes you to take care of things, the renewals, which are of course keeping your existing customer, and enforcement of the lease, which could be them or it could be the people around them. If you focus on these 4 things, what you will have is a very happy customer that will renew year over year. When one of these things breaks down, what you then have is a vacancy. Then you have to move over to the prospect and the new category, which of course costs money. By far and away, the easiest thing you can do to maximize your cash flow is to take care of your existing resident. Next are your new residents, and there's 4 things that I want you to focus on. 1 is the resident screening. 2 is the paperwork that they sign when they move in. 3, their experience on how the place looks and the process. And 4, whether or not they have resident insurance or not. You might ask, why would I include resident insurance at this point? Because things happen at the properties. Water damage, fire, smoke damage, those kinds of things. They turn to the landlord, and if they have a resident insurance policy, what they've done is they've self-insured for many of those items, therefore eliminating the conflict between the landlord and the tenant. On the screening side, just like you're getting a home loan or an automobile, there needs to be a process of which you actually check to make sure that they can pay you rent later. Otherwise, they're moving in and you're battling with them on their ability to pay. So the paperwork that they sign, their lease agreement, their pet agreement, or whatever it is that you have them sign, needs to be executed and in the file and enforceable at any time. That also includes any neighbors that might be in the proximity of them. The next category are your prospects. You always want to be planting seeds in the community, so you're always getting phone calls, emails, or texts in the event you have a potential vacancy or you have one currently today. This would include drive-by signage, online, referrals from the existing people that have been with you or are with you now. Of course, there are many other ways to market your property. The point here is you always need inbound customers, whether you're vacant or not. Pro tip number 2 is cash flow after customer. By focusing on the existing resident and their individual satisfaction with you as a landlord or the property manager themselves, you're going to have better occupancy. Better occupancy means less turnover and higher cash flow. So there's 2 kinds of income. There's rent and non-rent. Rent, of course, is easy to identify. It's also easy to measure. Managing your vacancy and managing your turnover directly affect how much rent you might collect. For example, one of the things that we do as a company is we require a 60-day notice to vacate. So in that 60 days, it gives me an opportunity to talk to the tenant to see if they want to stay and why they're moving, inspect the apartment to see what kind of damages, or to show their property during the notice period so that I can have another renter before they move, and to market to the prospects that could potentially cover that vacancy when they do move. So turnover, retention, and managing vacancy is everything, and it's super easy to do if you're just communicating well to your existing tenants. Enforcing the lease and all the paperwork is also very important on resident retention. For example, if they live in an area where there's lots of parties, lots of parking, or there's lots of problems, that's typically a rule enforcement problem. If you can clean up that environment, they'll have a better experience and they'll stay longer. Now, most people don't think of the non-rent category, but it's a big topic around here at my company. So the first one is month to month. The second one are pets. The third one, parking and storage. And there's many others, but those are the 4 I picked for this video. So in our company, there's quite a penalty to stay month to month, because the whole purpose of a lease is to have a little bit more of a guarantee of a tenant there and a cash flow over a long period. But if the resident wants to be month to month, there should be an additional fee for that option. In some of my properties, people want to be month to month because maybe they're buying a house, they're moving to another job, moving to another state, but that's real income to allow them to stay month to month. What you really want as a landlord, however, them on a longer term lease so you don't have big fluctuations in cash flow. The second one are pets. Now, in our properties, we actually decided to embrace pets. Pet owners, in our experience, typically understand that they have to pay more for pets in both the form of deposits and in the form of pet rents, and we've also had a very good experience with most pet owners. Parking can also be super contentious at many properties, and so what we try to do is leave open parking for free. Carport parking and garage parking, we actually charge additional for. It's not unusual for us to have a $50 carport fee and over $100 for a garage each and every month. In some cases, we've allowed them to use the garage for storage, which also can help you retain them as tenants longer term if they're moving from a big home, for example. But parking and storage, if you have the options, are great additional resources. You can see $100 to $200 per month per unit in additional revenue. Property tip number 3, KPIs, or key performance indicators. It's very important if you're managing your own property or you're managing your property manager that they have KPIs for different things. I've given you 3 here, but in my company, we have 10. So let's just take occupancy, delinquents, and work orders. In my opinion, I picked the top 3 that can drive top-line revenue more than any of them. When your occupancy is higher, you're typically collecting more income. The way to keep occupancy high is constant interaction and communication with your residents and continuing to market your property so you have a lot of inbound people looking at your property. What you want here is a list of people that are continually interested. In the event you have a vacancy, you're not scrambling with real vacancies trying to fill the bill later. The second one, of course, are delinquents. This is something that a lot of people struggle with. When you sign a contract to buy a car and you don't pay on the car payment, you have something that we call a repo man. In a lease, it's called an eviction. These are not fun, but you have to set the rules up front and let them understand that this is a contract that you have with them and you expect them to pay, of course, after you run a criminal and credit background check. Very important that you run a criminal and credit background check. It's been my experience that the minute that you tell them that you're going to run a criminal and credit background check, which, by the way, they pay for, let's say $50 or $75 for the ability of you to run their own credit, they typically take that application and never call you back. Just by you asking, you're going to eliminate most of your potential issues. Then, of course, becomes the enforcement. So the lease should be super clear about what happens if they can't pay rent on time and what the late fees are. Or, of course, if they pay with non-sufficient funds. This is an area that most people compromise, and as a landlord or a property manager, you can spend an inordinate amount of time actually chasing down funds here. As a rule, in our company, they have to pay the full amount plus late fees if applicable, and we don't allow partial payments. The minute you collect a partial payment, it resets the clock on any legal progress that you may have started. The third one, which might sound obvious, are work orders. But imagine if you're in the tenant's position and you have a toilet that doesn't work and you're down one bathroom. The inconvenience that they have pisses them off. So the communication and response you need to have set up perfectly. So when there's a text, when there's an email, when there's a conversation, there has to be a course of action that satisfies them. If you could show that you're a responsible landlord, then what's going to happen is they're going to say, this is a great experience. We've had some issues, but they were resolved quickly, efficiently, and in accordance with the lease. I might renew. And that's actually what you're trying to do here. I've seen so many situations with poor management where the complaint was actually that they never fixed anything. They never got back to me. The residents around me were always disruptive. That's when people move, but they don't want confrontation, so they don't say that. They just move. You can mitigate this process by high communication and good response. In this slide, I talk about maximizing property management. As you can see, on the left side of the slide is managing the tenants. On the right side is managing the property, which is actually everything. On the left side, managing the tenants, of course, we have the income and we have the expenses. We've talked a lot about income and maximizing occupancy and other income. We haven't discussed a lot around expenses, which I'll do in another video. But managing expenses is super important because what we're driving to here is maximizing the net operating income, which is simply revenue minus expenses. Once this is maximized, no matter what kind of trouble you're in today's current environment, you know that you've done everything that you can to maximize the net operating income. When you find yourself in front of a lender, more equity, or even a new buyer, you're going to want to make sure that you've done everything you can to maximize the income of this property. On the right side, of course, that's more managing the property and the partnership. And that is where the debt kicks in. So after the NOI or the net operating income, you have your debt. And this is where people are getting killed right now because of the rising interest rates. The people that had floating debt, their mortgages have gone up each and every month. In some cases, we're seeing 8, 9, 10% if they didn't lock in their rate 1, 2, 3 years ago. So fixing this debt, which we talk a lot about on this channel, is imperative if you're going to see the next category, which is cash flow. So you can do really well at the net operating income level, but if your debt continues to go up, everything that you do above the debt line item is simply going to crush the cash flow below it. And this cash flow is exactly what you need to build your reserves and distribute to your investors. So that's why maximizing income, minimizing expenses, and fixing debt is so important, because if you don't do those three things, you're going to be in trouble down the road. The next piece, of course, is depreciation. This is a non-operating expense. All this means is that IRS allows you to depreciate your property over a certain period of time, which can offset your income and making it either taxable or not taxable. So we're driving for cash flow, but we're also buying for depreciation expense because now we can distribute cash flow and report a loss to the IRS legally.